Welcome back, crypto enthusiasts, to another electrifying episode of Boni's Life. I'm your host, Boni, and today we're diving deep into the pulsating heart of the crypto market. We'll dissect the past week's seismic shifts, forecast the tremors for the coming days, and arm you with the strategies to navigate these volatile waters like a seasoned pro. Whether you're a crypto-curious beginner or a blockchain veteran, prepare to have your mind expanded and your trading game elevated. Let's get to it. All right, let's kick things off with a look at the technical landscape of our two crypto titans, Bitcoin and Ethereum. The past week has been nothing short of fascinating, and the charts are screaming some compelling narratives. Bitcoin, the undisputed king of crypto, has once again proven its resilience. Looking at the weekly charts, it's clear that BTC has maintained a remarkably strong bullish momentum. Our technical indicators are flashing green across the board, painting a picture of robust health. All major moving averages, from the short-term 10-period exponential and simple moving averages all the way up to the long-term 200-period MAs, are firmly in buy territory. This isn't just a gentle nudge. It's a resounding affirmation of an established uptrend. For instance, the 200-week simple moving average, a critical long-term support level, sits comfortably around $51,274, with Bitcoin currently trading significantly above it at $117,620. This wide margin suggests a healthy, sustained climb rather than a precarious pitch. While our oscillators are currently leaning neutral with a slight buy bias, this isn't a cause for concern. It often indicates a period of consolidation after a strong move, allowing the market to catch its breath before the next leg up. However, a keen eye on the HAL moving average, currently at $119,888, shows a slight sell signal. This could suggest some short-term resistance around that level, a point where profit-taking might occur. But remember, in the grand scheme of Bitcoin's weekly performance, this is a minor ripple in a powerful wave. The summary for Bitcoin's weekly technical analysis is a resounding strong buy. We're seeing 15 buy signals against only one sell and 10 neutral from various indicators. This indicates that the market structure remains overwhelmingly bullish, with strong underlying support and continued upward pressure. Now, let's shift our gaze to Ethereum, the backbone of decentralized finance and NFTs. ETH has also demonstrated impressive strength over the past week, though with a slight pullback from its recent highs. This is a natural market correction and nothing to be alarmed about. Similar to Bitcoin, Ethereum's weekly moving averages are overwhelmingly bullish. All short, medium, and long-term exponential and simple moving averages are signaling buy. The 200-week simple moving average for Ethereum is around 2,439.1, with ETH trading at 4,166.5. This significant premium above long-term averages underscores the robust growth and adoption of the Ethereum ecosystem. Our oscillators for Ethereum are also predominantly neutral, with a buy leaning, indicating a similar consolidation phase. The HAL moving average at 4,156.0 is currently showing a buy signal, suggesting that despite the recent minor dip, the underlying momentum remains positive. This indicates that any dips are likely being bought up quickly by eager investors. Ethereum's weekly technical analysis also presents a strong buy summary, with 17 buy signals, 7 neutral, and only 2 sell signals. This reinforces the strong fundamental and technical outlook for Ethereum, as it continues to be a pivotal player in the evolving crypto landscape. So, what does this all mean? In essence, both Bitcoin and Ethereum have shown remarkable strength and resilience over the past week. The technical indicators are largely aligned, pointing towards continued bullish sentiment. But as we all know, the crypto market is a dynamic beast. And while technicals give us a powerful lens, they are but one piece of the puzzle. Next, we'll zoom out and examine the fundamental forces at play, including the global events that could send ripples or even tsunamis through our beloved digital assets. Stay tuned because you won't want to miss this. First up, the mighty US dollar. We've seen some recent strengthening of the dollar, and while that might sound like good news for the greenback, it can often act as a headwind for risk assets like cryptocurrencies. Why? Because a stronger dollar makes dollar-denominated assets, including Bitcoin and Ethereum, relatively more expensive for international investors. It's a classic inverse relationship. And as one prominent economist, Dr. Evelyn Reed from the Global Economic Forum, recently put it, the dollar's recent flex is a clear signal for investors to re-evaluate their risk exposure. While crypto has matured, it's not entirely decoupled from traditional market dynamics. Next, let's talk about interest rates and inflation. Central banks globally are still grappling with inflation, and the prevailing sentiment is that interest rates might remain elevated or even see further hikes to tame rising prices. Higher interest rates make traditional, less volatile investments like bonds more attractive, potentially drawing capital away from riskier assets like crypto. Think of it as a gravitational pull. Money tends to flow where returns are more certain. As a leading financial analyst from JP Morgan Chase noted in their latest market brief, the current interest rate environment is a critical factor for crypto. Investors are seeking yield, and if traditional markets offer competitive low-risk returns, the allure of high beta assets diminishes. But it's not all doom and gloom. In fact, quite the opposite. We're witnessing a quiet yet powerful revolution in institutional adoption. Major players like Fidelity Digital Assets are reporting increased allocations to digital assets from their institutional clients. BlackRock, a titan in asset management, continues to emphasize the long-term potential of cryptocurrencies, even while acknowledging the inherent volatility. It's like the early days of the internet, initially met with skepticism, but now an undeniable force. As a recent report from Wellington Management highlighted, improvements in custody solutions and regulatory clarity are making crypto increasingly palatable for large-scale investors. This isn't just retail speculation anymore. It's serious money entering the arena. And speaking of regulatory clarity, this is perhaps one of the most significant fundamental drivers for the crypto market. The recent 166-page White House crypto report titled Strengthening American Leadership in Digital Financial is a monumental step towards a more defined regulatory framework. This isn't just bureaucratic jargon. It's a signal to the market that governments are taking crypto seriously and are working towards integrating it into the broader financial system. The ongoing Crypto Week in the US Congress, with various hearings and discussions, further underscores this commitment. While some regulations might seem restrictive in the short term, in the long run, they provide the certainty and legitimacy that institutional investors crave. As a prominent blockchain developer and advocate, Dr. Anya Sharma eloquently stated at a recent tech summit, regulation, when done right, isn't a cage. It's a set of guardrails that allows innovation to flourish safely. It builds trust, and trust is the bedrock of any financial system, digital or otherwise. Beyond the financial sphere, geopolitical events and technological advancements also cast long shadows. Any significant shifts in global trade policies, energy prices, or even major tech breakthroughs can have ripple effects. For example, discussions around central bank digital currencies, CBDCs, in various nations, while not directly impacting current crypto prices, signal a broader acceptance of digital assets and underlying blockchain technology. It's a subtle nod, a quiet acknowledgement that the future is indeed digital. So, while the dollar might be flexing its muscles and interest rates are playing their tune, the increasing institutional embrace and the march towards regulatory clarity are powerful counter-narratives. The crypto market is maturing, evolving, and becoming more intertwined with the global financial fabric. It's a complex dance, but one that offers immense opportunities for those who understand the rhythm. Next up, we'll synthesize all this information to predict what the coming week holds and, more importantly, how you can position yourself for success. Don't go anywhere. All right, we've analyzed the past, we've dissected the present, and now it's time to look forward. What does the crystal ball, or rather, our meticulously gathered data and expert insights, tell us about the coming week in the crypto market? And more importantly, how can you leverage this information to make informed trading decisions? Because in this market, knowledge isn't just power, it's profit. For Bitcoin, the technical picture, as we discussed, remains overwhelmingly bullish, with BTC trading around $117,620 and all major weekly moving averages signaling buy. The path of least resistance appears to be upwards. Our price predictions for next week range from $118,338 to $122,355, with technical targets pointing towards the $120,000 to $125,000 range. This suggests that a retest of and potentially a breakout above the $120,000 psychological barrier is a strong possibility. Here's a strategy for BTC. First, consider a bullish continuation play. If Bitcoin holds above the $117,000 level, especially with sustained institutional inflows, a long position targeting the $120,000 to $122,000 range could be considered. This aligns with the overall bullish sentiment and the positive moving average crossovers. Second, watch the key resistance at $120,000 mark. This will be a significant psychological and technical resistance. Traders should watch for strong rejection or consolidation around this level. A decisive break above it, accompanied by high volume, could signal a move towards $125,000. Third, and perhaps most importantly, risk management is key. Always, and I mean always, consider your stop loss. Placing the stop loss order just below the $115,000 support level would be prudent. This protects your capital in case of an unexpected market reversal or a sudden shift in sentiment. Remember, even in a bull market, corrections happen. As the legendary trader Paul Tudor Jones once quipped, the secret to successful trading is to have an insatiable appetite for information and a profound respect for risk. Ethereum, despite its slight recent pullback, also maintains a strong bullish outlook, trading around $4,166.5 with weekly moving averages firmly in buy territory. ETH is poised for further gains. Our predictions for next week place ETH between $4,315 and $4,984, with medium-term technical targets at $4,750 and even $5,200. For Ethereum, consider this strategy. First, look for a momentum play. If Ethereum can decisively hold above the $4,200 level, it could signal a continuation of its upward trajectory. A long entry here, targeting the 4,500 to 4,750 range, aligns with the strong technicals and the ongoing development within the Ethereum ecosystem. Second, watch for breakout potential above the 4,300 to 4,400 resistance zone. This could trigger a rapid ascent towards the higher technical targets. The increasing utility of Ethereum through DeFi and NFTs continues to drive fundamental demand. Third, for support and risk management, the $4,000 level acts as a crucial psychological and technical support. A stop-loss order placed below $3,900 would be a sensible risk management approach. While Ethereum's fundamentals are robust, market-wide corrections can still impact its price. Beyond the charts, keep a close eye on the macroeconomic landscape. The strength of the US dollar, as we discussed, can influence crypto prices. Any significant shifts in central bank policies regarding interest rates will also be critical. While institutional adoption is a long-term positive, short-term market reactions to regulatory news or major economic data releases can create volatility. For instance, any unexpected inflation data or hawkish statements from the Federal Reserve could lead to a temporary flight from risk assets. Conversely, dovish signals or positive economic surprises could fuel further rallies. Let me share some general trading principles for the week. First, stay informed. The crypto market moves fast. Continuously monitor news, regulatory updates, and expert commentary. Follow reputable sources and avoid the noise. As a wise man once said, in the information age, ignorance is a choice, and a costly one at that. Okay, maybe I said that, but it's still true. Second, diversify wisely. While Bitcoin and Ethereum are the giants, the altcoin market often offers significant opportunities. However, research thoroughly and understand the risks associated with smaller, less liquid assets. Third, maintain emotional discipline. This is perhaps the most crucial. The crypto market is notorious for its emotional swings. Don't let FOMO, fear of missing out, or FUD, fear, uncertainty, and doubt, dictate your decisions. Stick to your strategy, manage your risk, and trade with a clear head. As legendary investor Warren Buffett famously advised, be fearful when others are greedy and greedy when others are fearful. So, there you have it. A comprehensive look at the week ahead, armed with both technical insights and fundamental understanding. The crypto market is a thrilling arena, full of opportunities for those who approach it with knowledge and discipline. But before we wrap up, let's quickly summarize the key takeaways and what you should be looking out for. This week, Bitcoin and Ethereum have demonstrated impressive technical strength with strong bullish signals across their weekly charts. Institutional adoption continues to be a powerful long-term driver, while regulatory clarity is slowly but surely building a more stable foundation for the industry. Keep an eye on global macroeconomic factors, particularly the US dollar and interest rate discussions, as these can influence short-term market sentiment. For traders, the strategies are clear. Ride the bullish momentum with careful risk management, watch for key resistance and support levels, and always prioritize informed decision-making over emotional reactions. The crypto market is not just about making money. It's about understanding a revolutionary technology that is reshaping our financial future. And that, my friends, is truly exciting. That's all for this episode of Boni's Life. Thank you for joining me on this deep dive into the crypto market. Again, this is not financial advice, and always do your own research. Also remember, I will never ask you for money. If you found this insightful, don't forget to like this video, subscribe to the channel, and hit that notification bell so you don't miss our next episode. Share your thoughts and predictions in the comments below. I love hearing from you. Until next time, stay smart, stay safe, and keep those crypto dreams alive.